This is your Daily 5 for May 18th, 2020. I am today's host, Bruce Fraser. Chart number 1. This is a seasonal chart of all the U.S. presidential election years going back 116 years. This has been our forecasting for fun chart that we have been studying since the beginning of the year. It showed an important reaction occurring in the new year, and then another rally, building a cause for an important up move in the second half. Well, we think the chart has been, in fact, working. It's been pushed back a month because this peak that appeared to come in January actually came in February when we line it up to the Dow Jones Industrial Average. The important decline that occurred into the March lows, here it shows February, but it actually came in March. Two-stage advance upward here, two-stage advance upward, concludes with a minor distributional top on the cycles chart. We'll notice the minor distributional top showing up in the Dow Jones Industrial Average. This is fascinating and seems to coincide with the cycles work. We forecast for fun, but then we confirm it with the actual market data. So let's go on and look at some other data to see whether or not it confirms what we're seeing here. Here's the S&P. Here's a reaccumulation count in this two-stage advance. Gives us a count 2909 to call it 3004. And here is an updated chart through Friday. And this chart shows that the count range was hit right in the middle at 2950. Now keep in mind this is intraday data, so we're zooming in here. And the thing I'd like to show you is the distribution appears to be nearing completion, if in fact it is distribution, and look at the nature of this rally. It is much less robust than the rallies that preceded it in this structure. So this is a sign of diminishing demand characteristics and generally a market that's tired of going up, at least for the moment. Okay, so here's the Dow Jones Industrial Average, same time period. And we've labeled this with a distributional count structure, buying climax, secondary test, up thrust after distribution. Notice the failure off of this up thrust after distribution, sharp decline, rally of poor quality into a lower high, and then a sharp decline which takes out the previous low. We're calling this a sign of weakness. Notice the rally, same characteristics as the S&P. This is a rally of poor quality into two forms of resistance here in these two trend lines. So now we would be watching intently for some kind of a reaction that could occur off of this level, which would confirm the completion of distribution. Well, how far down could this go? Well, we take a segment. We count from the lower high over, and we can see that this has a climactic quality over here. And so we take this as segment 1, and this count takes us down to 21,600 to 21,200 from a high of 24,750. And so we can see that there is a reaction potential here in this point and figure count. If we get to and through these count objectives, we will then go out and take this area and count a second segment. You can also see that the volatility is increasing in the structure and the volume is increasing compared to what preceded it over here. That is a classic characteristic of distribution. Okay, two charts to look at. This is chart number 4, and this is automatic data processing. We're going to look at two employment-related companies. Automatic data processing processes payroll checks, among other things. And here you can see that ADP made its relative strength high in the summer of 2019 and was in a robust uptrend when this peak in upthrusting action makes the final relative strength peak, and this upthrust, we're going to call it upthrust after distribution, minor new high, then produces an important reaction with the decline in the market. But notice the relative strength is already in a downtrend. So this decline is really a severe decline because it's already a relative strength laggard. So what kind of account potential is there in ADP off of the peak? So we can see the distributional count across here counts down to 104 to 78. And in fact, we go right to this 104 area, touch it exactly, and then have a rally. We have a redistribution count that we can take here. This takes us back to 104, down to a midpoint count of 97. This could be extended out further, but let's see what happens if in fact ADP can return to this level. But with this extreme unemployment situation, we would suspect that ADP's earnings and sales numbers are going to generally be lackluster for the foreseeable future. Now, on the reverse side, here is a company that is an employment-based company, Slack Technologies, which produces technology which allows workers to be in remote locations and collaborate in a number of different ways in their platform to be able to work together. So you can imagine how a company like this could benefit from workers working either in remote offices or working from home and being able to collaborate with other workers in, say, headquarters or other places. So this is sort of a dynamic new technology. This is a company that's just issued its IPO in 2019. It has characteristics of accumulation that have formed here. It's you can see the downtrend, which is fascinating. This downtrend was broken at the end of 2019, and then on this COVID-19 scare into the March lows, it actually had a shakeout, which was a severe shakeout that went back down and touched the downtrending supply line one time and reversed off of that with the test and had an important rally into a sign of strength. And then the character of Slack changed as it pulled back to old resistance, which is new support, tested that support area with an LPS, and then had a even smaller backup the next time. And now the third time is not even backing up, but is just going sideways. So here, let's just look at the point and figure chart, which gives us a count off of this accumulation area that goes up to 57 to 68 from Friday's price of 31.33. And thank you so much for being here. We'll see you next time.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.